we want to talk about the yen, we want to talk about exchange rates, but I want to start about that. That's a very big reduction. Now, presumably it has a lot to do with the big surge in commodity prices, particularly energy prices, which we can see that filtering through to Japan's headline inflation rate, and people are complaining about it. How big of a threat is this to Japan? Is Japan just doing is it just a one-time response to something you think is going to go away, or is this a genuine weakening trend?
Thanks, Kathleen. It's good to see you in person as well. So just to explain, it is a fairly large downgrade from 3.3 to 2.4, but it is actually not fully related to, the developments in Ukraine. It's also the developments earlier this year with regards to Omicron and our estimate that some of the global supply chain disruptions will take longer to resolve. So that accounts for about 0.4 of the reduction. And then the developments in Ukraine, the war in Ukraine, account for about 0.5% of the percentage points of the reduction. And that's a mix of commodity prices, as you mentioned. It's a mix of weaker global demand, particularly out of Europe. And then finally, it's also issues related to confidence effects and financial market volatility.
When you see this extreme weakening, I guess it's probably the rapidity of this weakening. A currency that was stuck in a range forever, suddenly looking like it could even test 129, that it could get even weaker. What kind of signal is that sending? Is it something, what does it mean for the economy? What does it tell us about the economy?
Right. So we view the weakening so far basically in line what we see as some fundamental developments over the last couple of months. One is, of course, rising commodity prices, which we've discussed, which since Japan imports a lot of commodities, puts, again, downward pressure on currencies that import commodities. And second is changes in perceptions of how monetary policy will occur in some key central banks, particularly the United States. So you have this perception, and probably accurate, that the Bank of Japan will maintain its very accommodative stance, whereas we see the Fed and other central banks tightening. So that's putting downward pressure, again, on the yen as well. So that's broadly what we have. In terms of impact, so in Japan, it's kind of a mixed impact, right? For example, companies that produce goods and services that export or earn a lot of their revenues abroad will gain from yen depreciation. But of course, on the other side, there are companies that import and households that will feel potentially higher prices, and they will be more harmed by the yen depreciation.
So what do you make of these signals, these words that are being spoken that suggest that Japan, the government, the finance ministry, is considering intervening in currency markets to put a floor under the yen, maybe even get it stronger again?
So I'm not aware of any specific floor. I think even the previous discussion was that. We do see, though, that the Ministry of Finance has been ramping up some of their messaging on the yen to try to prevent it from depreciating further. So we'll have to see how this evolves over time.
So, Neil, once we move past the recovery from the pandemic, do we need to get back to talking about structural reforms? And what does it look like to be able to shore up the longer-term economic outlook for Japan?
Yeah, I mean, once the near-term issues with Japan resolve, and those are related to, of course, COVID, as well as the impact of what's happening in Ukraine, the longer-term issues for Japan are related to, largely the structural changes in the Japan and the Japanese economy. And that reflects things like demographics, population aging. So it is really important for structural reforms, growth-enhancing structural reforms to take place. And these cover a broad array of areas. Recently, the two new things I think the Japanese government is focused on, and we agree with those, are digital investments, digitalization of the economy. In addition, green investments, and I think that's positive not just for Japan but globally. But then there are the longer-term issues as well, which is things like boosting labor force participation, particularly of women and the elderly, as well as other issues related to some of the more long-standing reforms that are needed in Japan.
Ranil, I'm getting breaking news out of Japan right now. Exports rising 14.7% year-on-year. The estimate was for a rise of more than 17%. So when it comes to those shipments, it's missing those expectations. When it comes to imports rising more than expected, perhaps not surprising given rising commodities prices and the inflation in the import bill, 31.2% year-on-year, which is much higher than was anticipated. Now, this is leaving the adjusted trade balance down 15.6% from February. The trade deficit coming in at 899.85 billion yen, which is really much bigger than was anticipated, although a little bit of easing from the previous month. Again, we are seeing those exports missing expectations, imports rising more. We have exports being helped by a weakening yen, but imports also remaining elevated given rise in commodities prices. Ranil, let me ask you a little bit more about those broader reforms and the structural issues that Japan is facing. When it comes to these trade deficit numbers and the shrinking surplus, is this going to be an issue, especially given that the yen continues to weaken?
Right. So in the short run, you could have a weakening trade balance, and that reflects really the higher commodity prices. On balance, though, yen depreciation should help exports over the longer term and marginally reduce imports. So you think that yen depreciation does help in terms of the trade balance. Of course, Japan, it's just not just the trade balance. They also have an income surplus. And again, that can benefit from yen depreciation as well. So overall, the current account position remains in surplus.
So, Ranil, just coming back to the Bank of Japan, the part of what tied very closely, in my mind somehow, with this weakening yen is the fact, as you mentioned, Fed's tightening, right? BOJ is not going to remove stimulus. And so let's go to that part. Yield curve control, keeping stimulus there when the rest of the world's going in the other direction. Does this make sense? Should this continue?
So it makes sense from a domestic perspective for Japan, right? So basically underlying the need to maintain stimulus is to avoid too early exit from easing policies. And that's based on the outlook on inflation. So both the BOJ and our outlook on inflation is we may see a temporary rise in inflation above 2% in a couple of months. This is related to some mobile phone fee charges coming off. But when you look at underlying inflation, when we think of core inflation as defined, say, in the United States, excluding fuel, food, and these one-off factors like mobile phone charges, there are also a few other one-off factors that will come in later in the year. Underlying inflation in Japan is running only at about 0.5%. So it's pretty far from the 2% target that the BOJ would like to achieve.
At this point, though, is yield curve control such a key part of this? They've got their key rate still negative. The government is doing a lot of fiscal spending. At one point, the IMF did a report about possibly targeting 5-year yields instead of, or in addition to 10-year yields. Some people think that this will change once Governor Kuroda's term is up next year and someone replaces him. Is yield curve control something that's so important to maintain?
So our view it is because it's part of Japan's unconventional monetary policy strategy, right? When you have essentially hitting the lower at the policy rate, the short-term rate is at 0. In this case, actually slightly negative, minus 0.1. That means that monetary policy has to take other steps. Globally, we've seen quantitative easing. For Japan, quantitative easing has been there for a long time. The reason they used yield curve control was actually to have even relatively low yields essentially across the yield curve. And that's why we think it is necessary for Japan to maintain some form of yield curve control.